Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's poppin'? Yay.
What's happening, John Coleman?
I don't know what we talking about today. You got notes and shit? I'm nervous.
It's the end of the world, and we know it.
You don't even know who sings that.
REM. How you like me now? No teeth when I smile. You try to take me out the trailer, but I'm still buck wild. You know who sang that?
Beastie Boys?
A little bit of True. You know True out of the 504? Master P? No? Come on, John.
I do.
Yeah, you should look that up. That was a great album back in like 1999.
Why is it so hot in this office, but it's cold in the building?
Well, it's because we live in Florida, John, and it's hot everywhere. Nah, yeah, I'm excited today. I don't know why. Kind of pumped up. We got the UCF football helmet
No one
on the
cares.
set.
You can't finish.
3-0, baby. Got a big game this
Because you
weekend.
play shitty teams that don't
Got
have
a big game this weekend in Manhattan, Kansas. Did you know there's a Manhattan, Kansas?
No.
There's no way it's as cool as Manhattan, New York.
New
but
York's not that cool.
I think New York is pretty cool.
New York smells like boiled peanuts and ass.
Okay.
The city, at least.
Well, well, I do enjoy going to New York, but no, my UCF Knights are going to travel for the first time of two this year to the state of Kansas.
Who's the
Kansas
Jayhawks?
State. K-State. No, the other ones. Not the Jayhawks.
The purple
The,
Lions.
yeah, the purple and silver. Yep.
Yeah, I know my shit.
Yeah, so we have the UCF helmet. We're representing. I'm driving up to Augusta, Georgia for the second time this year.
We're getting ready for Masters 2024. Let's go.
I'm getting ready for Ironman 70.3. Yeah, so pretty excited about that. I had my last Ironman training workout this morning. Pretty excited. Tomorrow I had the day off, and Saturday I'm traveling. Maybe Saturday I'll do some yoga when I get up to the hotel room, just kind of stretch everything out.
What hotel are you staying in? They ain't got no JWs up there.
It's a Marriott property. It's attached to the convention center. And the convention, it's where the event happens. This is where registration is. This is where the expo is. It's kind of like I'm staying in the heart of it all. I'm not one of those guys that's going to go 10 miles off the beaten path and find an Airbnb for $99.
There you go.
Not my style, not how I roll. No, I'm excited about today's episode. Look, the Federal Reserve just met again.
Oh God! Hold on, let me gloss over.
You know
my
what,
eyes.
John? Many people are saying, "Oh God!" You mentioned your glasses. Our friend Barry Habib over at MBS Highway. He literally today was talking about Jerome Powell and his rose-colored glasses.
No, I said I need to
What did you talk about your glasses?
gloss over my eyes. Like I need to gloss over and just.
Oh, I thought you said you wanted to unfog your glasses. Because that's what this episode is going to be for the listener and the viewer. We're going to unfog some glasses.
Okay.
For homeowners, for real estate agents, and specifically mortgage loan originators.
Oh, shit.
Kind of hitting the trifecta like we try to do with most episodes.
Okay.
So, yes, the Federal Reserve meets. They said everything that we thought they would say, plus more.
More recession coming soon.
That's not what they're saying.
Oh.
That's what many of us are saying.
Still waiting.
Open your eyes. Take off the rose-colored glasses, Jerome J. Powell. Take them off. Just follow Peter Lynch's advice when he wrote in his book, Beating the Streets. Put your head on a swivel. Look out your periphery. See what's going on in your local community, and you will know the overall trajectory of our economy. But that's not how they operate. They like to look out of the rear view mirror. So they did not increase the federal funds rate, the prime rate. That did not go up. But they indicated that more than likely they're going to meet one more time. Well, no, they are meeting one more time before the end of the year. And more than likely they will increase another 0.25% or 25 basis points. But it was more of what they said. And what they said gave zero indication that they have any plans to lower rates anytime soon. Because the thought is, okay, raise, peak, sit, drop. Kind of in that order. And their indication based on the words they used was raise, take a deep breath, raise again, and hold. Market didn't like that. Stock market sold off. The bond market has sold off. When the bond market sells off, that means mortgage rates have dropped, and it means that it means that the price of bonds has dropped and mortgage rates have gone up. We're actually going to do the next episode after this one. We're actually going to geek out on mortgage rates. It's a listener request, a fan request. I've been holding on to it for 2 or 3 weeks. Didn't know if we were going to make some kind of a training video on it. Put the training video up on Tlop online only for our premium members. I'm like, you know what? No. Nope. I think these two episodes back to back, I think they will correlate. So I'm going to tease it now. The next episode that's going to drop on Tuesday, this is on a Friday, right? This is dropping on
tomorrow.
On Friday the 22nd. Then you'll see the next episode is going to be very geeking out, industry specific mortgage rates. But nonetheless, that's the current news. On top of this is pretty cool current news. Maybe it isn't cool.
Yeah, watch your mouth.
But here's what's cool about it. You and I produced an episode a little bit over a week ago titled something along the lines of why are realtors being sued?
No,
Great episode. Y'all should go check it out. And then it was announced in Housing Wire just 2 days ago that RE/MAX had settled for $55 million for a specific lawsuit where NAR, Keller Williams, RE/MAX, and other large national real estate brokers are being sued by ex-home sellers for unfair practices.
Is 55 mil for RE/MAX like a drop in the bucket, or is that like, oh shit, we got to close some offices?
I think $55 million for anybody is an oh shit moment. Yeah, I don't think anyone just bats an eye at $55 million. Maybe Wells Fargo, but most companies. So no, there's that hurts, right? That money just doesn't reappear tomorrow. But no, I don't know enough about their public holdings and how their financials are set up and their business model to say whether or not it's going to like put them under. I doubt it. If it was going to put them under, I think they would have fought harder. But nonetheless, I thought that was kind of cool that we were kind of in the know. Then all of a sudden it's like, bam, how timely. So today's episode, similar. It's like, bam, this is timely. So the Federal Reserve makes their statement. Mortgage rates went up again this week. But this is what was interesting in the news. It was less about Jay Powell and the Fed and their words, as well as their action, but more importantly, their words, because their words just is what freaked everybody out. I read this as well. This was being reported by CNBC, not MSNBC, right? If it's on MSNBC or if it's on Fox, I would like, yo, fact check that. This is CNBC. For the most part, pretty moderate, pretty down the middle, pretty much as newsy as you can get. They have their slants, I'm sure. But CNBC comes out and reports refinances have gone up.
What?
Yeah, you would think typically in a market where mortgage rates are
high,
going up,
they wouldn't want to refi.
They wouldn't want to refi.
Even I know that.
Maybe Jay Powell and his friends need to actually look into this reporting, fact check it themselves, figure out the validity of the information, and ask themselves, why in the double H hockey sticks? How do you do that?
Double H. It's H-E.
H-E double hockey
sticks.
sticks?
Can't even spell hell. Jesus.
Well, because I just say hell. Yeah, I don't speak that third grade language any longer, John, but I was trying to be nice for those that are tuning in with their mom and dad in the backseat of their car right now.
Right?
No, but like, why would a consumer be refinanced in today's market?
Because they need them racks.
Because they need them racks. Yes. Because
they're frugal and they don't spend any money right.
Because starting October, they're paying their student loan debts. Because they've maxed out their credit cards. Because the interest rate on their credit card has skyrocketed. Because an interest rate on an auto loan is through the roof. Because financing in general is harder to obtain. Like everything from if you're an angel, if you're a tech startup trying to raise startup money, that liquidity has dried. If you are trying to build apartments, that liquidity is drying. If you're trying to buy fix and flips, that liquidity is drying. So yes, financing is more difficult. So if you're sitting on a pile of cash and that cash is in your home, it doesn't matter what interest rates are, you're starting to get into a point of like desperate times, desperate measures. Well, you tend to only do that when you're maybe slipping into a softer economy. Because if people don't have money to spend, businesses don't make money. If businesses don't make money, businesses can't invest in personnel. They can't invest in technology. And everything starts to contract, which is what the Federal Reserve wanted. Many of us believe they did everything they needed to get what they wanted. They just haven't given it time. They just have to give it time. And they haven't given it time. So the messaging for today is, y'all, loan officers, refinances, they are a thing. I looked this up because I wanted to know. Knowing what has happened to interest rates over the past, 18 months. What percentage of overall mortgage volume is still tied to refinance transactions?
37%.
Get the out of town, John.
Am I right?
It's like 33%. Yes.
I told you I'm a universe guy. I be knowing shit.
Wow, you do be knowing shit.
Yeah.
Because I would have guessed, 10%. Why? Because in the mortgage operation that I help run, we're like single digit refis, 2 to 5% refis. The industry is still 1/3 refinance. So there's mortgage loan originators currently tuning in that are like, damn, I don't have 1/3 of my business being refi. And I would be like, damn, why not? Why do you not? What type of messaging are you not putting out there with your circle of influence? Those are friends, that's family, those are neighbors, those are ex-coworkers. What type of messaging are you putting out there to your past clients? Or what type of messaging are you putting out there to your realtor referral partners? Yes, we rely on the real estate community to refer us home buyers, but they can also refer us homeowners who are in a situation where all of their money is tied up into their home and they need to access it. Because accessing that money, even at a 7.5% or even an 8% rate, is a lot better than not being able to buy that car that they need, or not be able to invest in that business that they want to open, or not be able to consolidate and pay off all of their credit card debt that now has a 18.99 or a 22.49% interest rate, or not be able to make their student loan payment that they haven't had to pay for 2 years, but now it's coming due. They did buy a house 2 years ago. They do have a boatload of equity in that home. Could they not tap into that equity and just go ahead and get ahead of that student loan payment and pay the whole damn thing off? So cash out refinances is a thing. They just ticked up last week and they're still 1/3 of the business. So if you're a loan officer, I want you to ask yourself, how many are you doing? And if you're not doing them, why is it? And I'm going to tell you the answer. Because you're not intentional enough with your marketing activity to let people know the benefit that they bring. And if you're a homeowner, you need to understand the benefit of a cash out refi. Like, look, none of us need to repeat the errors of the past where people use their homes as ATM machines to live these lavish lifestyles.
That's what I would do.
And luckily, lending does make it more restrictive to do a cash out refi. Like when I bought my house in 2004, by 2005, I could legitimately go to a bank, have them give me a $30,000 home equity line of credit. They didn't even order an appraisal or verify my income. They literally gave me a loan tied to my house as long as I kept that loan balance under $30,000. That meant I could have been 100% combined loan to value, meaning I owed 100% of what my home was worth. They were cool doing that. That stuff don't happen anymore. Like I'm talking HE loans or HELOCs. Those are home equity loans, home equity lines of credit. They're probably going to cap you at a 90% combined loan to value. And a cash out refinance is probably going to cap you between a 75 and an 80% loan to value. So the good news is there are stopgaps in place that protect consumers against themselves. But if you are a consumer, please know you should not be doing a cash out refinance every 3 to 5 years to bail yourself out of some sticky situation or to live a lifestyle that you otherwise can't afford, whether it's the vacations you take, the luxury boats that you buy, whatever the case may be. But if you find yourself in a situation where you are cash poor or cash strapped, you have a boatload of equity in your home if you bought that home sometime 3, 5, 7 years ago. Why shouldn't you tap into your own money to allow yourself to sleep better at night, to prepare yourself for future financial freedom, to undo a mistake and learn from it so that you can also have a better marriage, be a better parent to your children, be a better friend to your friends, and get a better night's sleep. So please know, if you own a home and you have a boatload of equity, regardless of what your rate is, it's not about your rate. It's about your income coming in versus your debts going out, your debits going out. And a cash out refinance could easily, in many people's cases, even if the rate goes from 3 to 7, it could save someone $1,200 to $1,500 a month in overall bills.
The hell?
Imagine what your life would be like right now, John, if you had $1,000 less per month in bills.
I'd probably be floating somewhere in the harbor because I partied too hard the night before.
Possibly. Right? So that's why we make sure we keep you living paycheck to
Oh,
paycheck.
yes, I keep myself living paycheck to paycheck.
It's for your own safety.
Literally.
It is for your
I'm
own safety.
100%. I'm not kidding. If I ever fell into that kind of cash, pray for me, because I'd blow it all.
And real estate agents out there, what are you doing to communicate to your circle of influence, to your referral sources, to your past clients, letting them know that, hey, look, if you find yourself in a spot where because of inflation, because of student loans, because of interest on credit cards, whatever, because the free government money has run out and you're living paycheck to paycheck, you're not able to make ends meet, but you did buy a house. Realtors, that's a reason to reach out to one of your clients. It's a reason to show them you care. It's also a reason to introduce them to your favorite trusted lender and let that lender come in and do something life-changing for them. That homeowner won't forget that realtor ever. And when they want to sell that house in 3 to 5 years, you better believe they're calling that realtor, because that realtor becomes their source of all information. Same thing applies to people who sell life insurance for a living or financial advisors. Heck, even HR managers. HR managers tend to know who's investing in their 401k. Why are they not? HR managers may know who currently is under a lot of stress. Maybe it's income related, right? Could you not bring in a financial advisor and maybe a mortgage loan originator to discuss the powers of home ownership and leveraging home equity? Oh, that'd be a great way to bring value to your employees and value to your associates. So today's podcast episode, I think we should title it something along the line of like, why are refinances increasing, or why is everybody refinancing? Like, what's going on right now that's forcing this? Well, I think it's economic conditions, and I think it's also housing conditions, meaning people are realizing, I'm going to stay in this neighborhood. There aren't any new homes being built that are better than the house that I have. Maybe they're doing a refinance just to do remodels and improvements, right? Maybe that's it. Maybe they want a new house, but they don't want to move, so they're just going to turn their current house into a newer house.
It's probably your first example. They just max out the credit cards and now ain't got no money.
Well, more than likely that is what it is, John. More than likely, and this is an opportunity for them to hit a reset button. And then they have to figure out what were they doing to max out those credit cards and stop doing that. But they can at least get it paid off. Like, think about this. If you had 30 grand in credit card debt, what's the likelihood that you're going to get 30 grand of credit card debt paid off? What would it take? Do you know?
A drastic change in lifestyle choices.
Yep. And you go getting a part-time job and working extra 20 hours a
What the
week.
hell?
Yeah. Go work 20 hours a week, making $20 an hour.
Shit.
That's $400 a week. That's $20,000 in 1 year. But after taxes, you only see 16. If you have $30,000 in credit card debt, not only do you need to pare down your lifestyle, John, you have to work 2 years part-time, making $20 an hour for 20 hours a week. Then you'd make enough money to pay off that $30,000 credit card debt. Or if you have a house with $150,000 of equity, why could you not go and do a cash out refi or a home equity line of credit or a home equity loan? Like, those are still some alternatives. Pull that 50 grand out, pay off the credit card, maybe pay off your student loan that's coming due. And now all of a sudden, you don't have that $300 a month student loan payment, and you don't have that $1,000 credit card payment. By the way, that was your minimum. You were paying just the minimum, and it was $1,000. So $1,300, and for what? You exchanged it for $350 in extra mortgage payment? Let's just say it was a $500 extra mortgage payment, $600 extra mortgage payment. Your mortgage payment went up by $600 so that you could save over $1,300. It's a $700 delta. That $700 for you could be $200 going into your 401k because your company matches 50 cents on the dollar, so $200 becomes $300. And then it could be the rest of the money is just so that you don't go further in credit card debt. That's the deficiency that you had each month. That's why you kept on going credit card debt. So yes, the writing's on the wall that we are sliding into a weaker economy, that a recession, whether it's a mini, a mild, or
Major.
a harder landing than was anticipated, is on its horizon. It could be easily 3-6 months away, upwards of 9. But the writing's on the wall just by looking at some of this recent news and what's coming out and studying buyer behavior.
Refis are back, so that means loan officers hit up all your past database and see and ask if they have credit card debt, and then tell them to refi.
In a way, yes.
Kinda.
In a way, yes. I would start with those people who bought 3 or more years ago.
Okay.
Because they have sufficient equity. And I wouldn't necessarily be like, yo, you got some bad credit card debt?
Yeah,
Are you maxed out?
I saw you at Bloomingdale's last week. You ain't got that kind of money. Come up off it.
Better yet, I saw you at Applebee's and I saw your card got declined.
Whoa, wow.
I saw your card got declined.
Shit, you better take that ass to Aldi's.
Yeah. So no, just a quick little fun show,
Yeah.
kind of open the people's eyes to what's going on. Here's what's going on that y'all do need to know. And I didn't get a chance to pump this earlier, but I got to pump it because it's about the Mortgage Bankers Association. All right, this is Advocacy Week.
Advocacy is what you meant to say.
Advocacy. Say that again for John.
Advocacy.
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 Yes.
Yes. Morepack Ma. You hear me talking about all the time. If you are a Tlopper, that means you're a member of tloponline.com and you go down to our like industry resources section, you'll see click this link and I link you to like NARREP and NAMBA and MBA. I also link you to Ma and Morepack. This is the week that we bring awareness to being involved in our industry. It's this involvement that allows us to fight collectively against trigger leads, to get every state to adopt remote online notarization, for us to go fight the CFPB when they need to be fought, right? This is what we do as an industry. It's each of us collectively coming together, fighting on behalf of our realtors, our clients, our borrowers, and each other. And this is the week that y'all just need to be aware that you need to sign up. You need to like dig in. So there's 3 things I'm going to ask of you. Text MAA, M-A-A. Text M-A-A 50457. So you're going to text the letters MAA to 50457. That's so that you can become a MAA member. It's free. Mortgage Action Alliance. That way you will be alerted anytime we need your help stepping in and contacting your congressperson or one of your senators. Ma keeps you informed. Morepack. I am a Ma member. Because I'm a Ma member, Morepack, the Mortgage Political Action Committee, they were able to ask me if I'd be willing to donate. Now, you can't ask people if they're willing to donate if they're not Ma members. That's why it's so important to become a Ma member first. But like because it's Awareness Week, I donated to Morepack, the Mortgage Political Action Committee. If you want to know more about Morepack, go to mba.org/Morepack, M-O-R-P-A-C. And then finally, if you really want to geek out and you really want to get involved in your industry, this is how I did it. It's one of my favorite conferences of the year. You've heard me talk about it before. The National Advocacy.
Are you kidding me? Advocacy, bro.
It's stuck on my tongue today, John.
Okay. Casey.
National Advocacy
There you go.
Conference is in Washington, D.C. It's in March of this year. It's amazing.
Next year.
Yeah. The upcoming year.
Sorry, you said this year. I just
Jesus Christ, John. I'm all over the place today.
That happens.
It's in March. It's in D.C. If you get lucky, the cherry blossoms will be blooming. Go to it. It's you and a few hundred other mortgage bankers throughout the entire country. You get to march on Capitol Hill. You get to meet with senators and Congress people. It's easy. It's fun. It's a great way to network. And it's an awesome place to go rub elbows. So because it's Awareness Week, you're now aware. We have a conference in March. You have Ma that you should be texting so you can join. And you should learn more about Morepack and figure out why and how I donated money this week to Morepack. If you're a Tlopper, that means you are a member of tloponline.com. I want to remind you that we have a phenomenal guest industry expert. It's a Tlop exclusive. We offer these once a month through our membership. Tlop exclusive. Last week we had on mega producer Mike Smalley. He crushed it, brought tons of value, had over 100 LOs logged in for that. Credit Christie. You've seen her on the show.
Shout out Credit Christie.
Yep. Christie Service is hopping on. She's going to be teaching us emotional intelligence and DISC personality profiling. This is understanding the platinum rule when it comes to communication. Platinum rule is
treat others like how they want to be treated.
Treat others how they want to be treated. The golden rule is treat others how you want to be treated.
Give me money.
Yep. I'll give you money, Sean. I promise. Yep. Just enough so that you can stay alive, but not enough that you kill yourself.
There you go. There you go.
But yeah, so you won't want to miss it. That date is September 27th. It's a Zoom webinar hosted by us. It's noon Eastern Standard. If you want to register, go to tloponline.com. On the main page, scroll down to event section. And on that event section, click the button. You'll find the link. Go ahead and register. She's great. It's going to be amazing. I love DISC personality profiling. Just to let y'all know, I'm a high I with a little C. If you don't know what I'm talking about, you need to log in so you can learn what your personality profile is, but more importantly, how to spot other people's profile so you can sell to them the way that they want to be sold to. More importantly, so you can communicate to them in a manner that is going to resonate with them. And then finally, we're talking about Tlop Online. Look, John and Mark knocked it out of the park. We relaunched this website just 2 months ago.
Mostly Mark.
We have 3,000 members.
Right.
We are offering massive discounts to go along with our massive value that we offer. But those discounts, like any discount, it's limited time. Look, y'all, truth be told, we're still in growth mode. You're still in growth mode. We want you to grow with us. So we wanted to entice our first several hundred Platinum and Platinum Plus members to join us. And we did so with super affordable, super cheap, almost too cheap pricing models. And then we went one step further and we guaranteed them for life. So whether you're a Platinum member or a Platinum Plus member, you are locked in for life on those prices. But prices are going up. They're going up on October 1st. So you want to slide over to Tlop Online and you want to sign up now, or at least register for a consultation now to figure out why so many LOs are joining every single week, and we're just getting started. If you were a freemium member, you need to understand that we have eliminated the freemium membership. So the freemium membership goes away on October 1st. That's being replaced by a basic membership. So basic membership, some of the same content that you're used to. John and I are still updating the website every single month. We added one extra call. We've slid in the newsletter, but freemium membership goes away. You now have 3 options: basic, platinum, or platinum plus. And I'm just going to let you all know the most bang for buck, the greatest value, it's in platinum plus.
There you go.
There you go. That's all the housekeeping items. That's all the things that make you say,
Good for you.
Y'all keep tuning in. Keep digging what we do. Give us a 5-star review. If you have any questions, I can be easily found on LinkedIn. First name Dustin, last name Owen. His name is John Coleman. You got to Google him to try to find his information. That's all the time we have for you today, but we look forward to catching you on the next episode. Peace.